Hello, hello. Good evening. Good evening. Gonna give a few minutes to let a few people sign on. Give some time to let a few people sign on. I'm on multiple devices as usual. I'm on. Hi, good evening, good evening. Excuse me, sorry, wow. I should have gotten my water. Hi, good evening. Hi, good evening, good evening. I'm on TikTok over here, and on here, I'm on Facebook and YouTube. So I have a couple of devices, a couple of streaming going on. So I just want to give a few minutes to let some people join before I start diving into these year-end tax tips, as well as some frequently asked questions. Okay, I'm on TikTok over here. Over here, I'm on Instagram. Over here, I'm on Facebook and YouTube. So I'm going to give about maybe 2 more minutes and see. Hi, good evening, good evening. I wonder if I'm getting on too early sometimes because a lot of times when I'm on social media and I see it's like 8 and 9 o'clock, everybody be on live. Hey, everybody be on live. Hi, when it's like 8 and 9 o'clock, everybody be on live. But it seems like when I go on at 7, I don't know. It's like a couple of y'all be joining in. Hi, good evening. So, y'all let me know if y'all would prefer that I come on later because maybe 7 p.m. is just like too early. Okay. So tonight I'm gonna be teaching y'all some year-end tax tips. Tax season is literally right around the corner. I can't believe it. It's like it came so quick. January, I don't know the start date yet of when IRS is gonna open, but we of course got to get ready. So that's why I said let me do these year-end tax tips now, because that's the thing, you have to know how these taxes work. Good evening, good evening. That's the thing, you have to know how these taxes work, because honestly, when you come to us professionals, when it's time to file the taxes, by then it's already too late. Okay, anything y'all wanted to do, y'all needed to do now. Y'all needed to do throughout the year. But being that it's not December 31st yet, you have a little bit of time to still do some things. Okay. And I'd appreciate it if while you're on, I don't really know how this live stuff works too much. I'm still getting used to it. But if y'all could like hit some hearts or hit whatever you're supposed to be hitting to kind of, so they could kind of push my stuff out and let more people know that I am live. Okay. So thank you, thank you, thank you to everybody joining me tonight. Thank you for your time. Also, you can comment and like let me know if you have a business. And tonight is not only going to be about business owners. And I feel bad because last on my last live, someone asked me, was this particular live for year end going to be only for business owners? And I was like, yeah, and it's really not. So I hope that person came back this time, because I have strategies for non-business owners as well. Okay, but do let me know if you're a business owner. I'm just curious. Okay, and I do thank y'all for coming tonight. Most of you, I believe, already follow me on social media. My name is Coach Tasha. Okay, and I help people and entrepreneurs with grow their mindset, make more money, and strategize with their taxes. Okay, I offer services all across the United States. I've been in this industry for 18 years. All right, now let me first tell you why you should even care about tax tips, tax strategies for year end. Okay, first of all, like I said, we do have a few more weeks left, and things that you do now is what's going to affect how better or not so good, how good or not so good your tax returns go when we file in 2023. Okay. So, and invite some friends. I'm getting notifications here that is telling me tell my viewers to invite some of their friends. So, invite your friends to this live. Okay. So, yeah. So that's the first thing. Okay. You only have a few weeks left to take care of anything that you're going to be able to do. Like when you go file taxes, when it's time to file, it's already too late to do some stuff. Okay. So there's still a little bit of time to do a few things. And it's also going to help you control where your money's going. Okay, that's the other thing. We don't want all of our money going to taxes. Okay, so now one of the first things I want to tell you about is maximizing your retirement contributions. Okay, and this actually applies to people who work a job as well as if you have a business. But first, right now, I'm going to speak about people who have a job because a lot of times your job will offer like a 401k. You should be contributing to that 401k because honestly, pick your poison. Pick your poison. Like the money's coming out of your paycheck anyway. Just pull out your last pay stub. Well, I know we don't get pay stubs anymore, but take a look at your last pay stub or whatever. Log in and log in and look at your last pay. Okay, the money's going to the taxes. So if you want less of that, then start contributing to a 401k. If you don't have one open yet, you should open one. Okay, the contribution limit for 2023 is 22,500. All right. So if you can redirect some of your money that's going towards your tax liability, federal taxes, you might as well just redirect some of that money and put it into a 401k. And a lot of times your employer will match your contribution, but even if they don't, you should just put it in there. Okay. Now, 401ks are an investment. Okay. Yes, they are an investment and they are risky, but like I said, yes, you can lose it. It can fluctuate. It does all of that thing. It does all of that. But what it does do is give you some tax advantages. Okay. And if that's what you're looking for, then that's a reason to contribute to your 401k. Now, for the business owners and entrepreneurs and freelancers and everything, we have what's called a solo 401k. Okay, a solo 401k. Now, solo 401ks have higher contribution limits. We can actually contribute up to 66,000. Okay, 66,000. So that's a huge benefit. All right. Now, to open up a solo 401k, you must be self employed, but don't be confused because even if you work a job, but you do have like something that you do on the side, you can still open up a solo 401k. All right. So, yeah, you must be self employed. You must not have any employees, and you do need a business EIN. Okay. Those are pretty much the qualifying situations. Good evening. Good evening. Okay. Then you also have another retirement account called IRA. Okay. An IRA. Now, with an IRA, the contribution limit is a bit lower. It's 6,500 if you're under 50. If you're over 50, if you're 50 plus, it's 7,500 for 2023. Now, these contribution limits do change every year. Okay, they do change every year. So you always want to check and see what the limits are because these are, what I'm teaching you tonight, you can implement these even, in future years, but you always want to find out what the contribution limits are. And these are also reasons why you should always be working with a tax professional. Okay, now anyone can open an IRA. All right, even if you're working a job, whatever. Now, for business owners, we have what's called an SEP IRA. And mind you, even if you're like young and I get it, maybe you're not, good evening, maybe you're not too concerned about your like retirement, that's so far off. I'm trying to help you think of it as in a different type of perspective. Okay. It's not so much about, um, you reaching retirement, that's why you're doing it. You're mainly doing it, okay? You're mainly doing it because of the tax strategy that you're getting. All right. And there's an opportunity for you to grow wealth there. Okay. So SEP, which for self-employed, okay, self-employed IRAs, our contribution limit is up to 66,000. Okay, so if you're someone, your business is doing really well and you're trying to find other places to put your money besides handing it all over to taxes, maybe you should think about opening up, if you haven't already opened up, an SEP IRA. Okay. And with these investments, you get to decide what you want your retirement accounts to invest in. Okay. Now, one thing I want to say about that 66K limit on the SEP IRA, whatever you contribute cannot exceed 25% of your compensation. So let's say, whatever you make, whatever you pay yourself, 25% of that is what it cannot exceed. Okay, that's the best way I can explain it. All right. Now, the thing about, IRAs and things like that and SEP IRAs, you can invest that wherever you want. Like, think of it, you can use those accounts to invest in stocks, mutual funds, bonds, real estate, annuities, all kinds of things. Okay, so again, think about that your money is being redirected away from taxes to your future. All right. So where do you want it to go? All right. Now, some people, will ask me, well, what about the Roth IRA? Because there is another one called Roth IRA. And there's really no one size fits all. Okay. There's no one size fits all. Roth IRAs are cool, but they don't give you an immediate tax advantage. So it really depends on what you're looking to do, what your goals are. Okay. That's what will make a difference in which way you should go. Okay, and what you should open up. Okay, now, another thing you can do, so that's, a couple of retirement accounts that I wanted to let you know about. Now, there's also something you can do called deferring your income. Okay, deferring your income. For example, if you're due a bonus, if you work and you're due a bonus from your employer, some employers will actually let you postpone your bonus until, like, they'll pay it out to you next year. Okay, like maybe in January. All right. It just, maybe speak to your employer, speak to payroll, see if that's something that could be worked out. Like, this is usually better for someone who's really in like a higher income and they're trying to like postpone some of that because they don't want to be hit so hard with taxes. All right. Sometimes you can have your bonus deferred. Now, if you're a business owner, okay, one thing you could do to defer income, you can actually have your clients pay some invoices next year. Okay. You can still invoice them this year, but listen, January is right around the corner. You can actually have them pay that invoice on January 1st. Now it's going to be considered income for 2024. Okay. Instead of 2023. All right. Some people don't really think of these things, honestly. Sometimes it's just the little things that can make a big difference. Okay. Now, another strategy that you can use is to accelerate your expenses or your deductions. Now, let me give you a few suggestions here. Now, let's say, for instance, like you're a homeowner and you're making payments on your house, mortgage payments and things like that, property taxes. And sometimes the property taxes can be tricky because of a limit that I don't want to get too much into, but you can, if you itemize, okay, if you're someone who still itemizes, which I know a lot of us really don't itemize that much anymore. We don't really get an opportunity to because they've raised something called the standard deduction. And I'm going to speak a little bit more about that later on. But if let's say you do still itemize and you have like excessive medical, dental, and things like that, and you make contributions, you can increase all of that. You can increase all of that to increase your deductions. All right. And you can actually, let's say, for instance, with the mortgage payment, you can like make extra mortgage payments. You can make extra mortgage payments. You see what I'm saying? To get like, we get to write off the mortgage interest. If you itemize, we get to write off that mortgage interest. So you can make extra payments, which would increase your itemizations. Okay, for the filing of 2023, because that's what I'm referring to. Okay. Also, if you are someone who makes contributions and like you're in a really high income limit, there is something out there called donor advised funds. Okay. Now, I really wouldn't suggest that you try any of this on your own. You always want to be consulting with a tax professional. But donor advised funds are a great strategy because you get to contribute the money now, right, to the donor advised fund, but it doesn't have to be paid out. Okay. Where it's going in terms of the donor advised fund, it can be paid out at a later time to whatever your fund is going to be contributing to. But the bottom line is you still get to write off now because you contributed to the donor advised fund now. Okay, you see how that works? So that may be something else that you want to consider. Okay. Now, in terms of business owners, some things that you may want to do to accelerate your expenses and your deductions is again prepaying for some expenses, especially things that you know are ongoing, the standard expenses that you have. Okay. Even I'm going to throw out there, for example, like a cell phone. You can pay extra money on your cell phone. You can, your cell phone bill or whatever, just little things that you have these expenses on a regular basis. All right, you can prepay some of those, and this is again if you're looking to minimize your liability. All right, your tax liability, because that's the main thing we're trying to do, right? We all owe taxes, but we can also reduce it. Good evening, good evening. Okay, so yeah, you can accelerate your expenses. All right, and this way you'll get the deductions now. All right, you can also like increase your supplies, whatever it is that you would normally spend money on. You can buy new equipment. If your business needs a new vehicle, you can literally go buy a new vehicle. And again, this is for people who are in higher incomes or higher revenues, and you're trying to reduce what's going to be going into their hands. Why not reinvest it back into your business? Okay, then let them have it. Okay, so that's the way I see it anyway. The money's going to be spent one way or another. Why not reinvest it into your business? Okay, so now I'm going to talk a little bit about homeowners. All right, homeowners. Okay, y'all can maybe give me some waves if you're a homeowner. If you're a homeowner, give me some waves. All right. Now, what you can do to strategize with your taxes, okay, you can look into energy efficient improvements. Like, I don't know if you've lately heard a lot of things going around about solar panels, right? Maybe everybody's like getting solar panels now, and a lot, and let me tell you, this is one of the reasons why. Okay, one of my clients who got solar panels installed last year when I did their taxes, I think their refund was something like 20,000. Okay, $20,000 refund. And a big part of that was because of the help that they got with them solar panels being installed. Okay, so maybe you want to see if that's something you could do. Other energy efficient things like windows, doors, appliances. Okay, these are things you can do to make your home more energy efficient, and sometimes you can qualify for certain credits. Okay, that's going to help you. So you want to make sure you're checking into all of that. All right. Another strategy we have. Okay, another strategy we have. Y'all following me? Y'all picking up what I'm putting down over here? Y'all hearing me over here? I'm trying to help keep money in y'all's pocket. If you my client, I like my clients know I treat your money like it's my money. Okay, honestly. So if you want to work with a tax professional who cares just as much about your money as you do, contact me. Okay, mytaxpartner2024.com. That's where you would want to go. I don't accept everybody. I don't. We're not always a good fit, but there is a pre, like I say like a pre questionnaire that you answer, and then we see if we take it from there. And even if not, I do have I'm in a network of other professionals, and I can always point you to someone else who may be more suitable for you. But let me get back to some more strategies, okay? Another strategy that you can work out is paying your kids. Who got kids? Comment in the chat. Who got kids? Okay, who got kids? Comment in the chat if you got some kids. You can pay your kids for 2023 up to $13,850. Okay, this is a strategy I use for all of my business owners who have kids under 18. Okay, uh, this is a strategy I use for them. They hire their kids. Now, the thing is, don't get me wrong, you do get to control the money. Okay, you get to control the money. And think about how expensive kids are, right? Our kids, we buying them clothes and they have different things they're doing after school activities, weekend activities, and all kinds of things like that, right? Just endless stuff. Okay, they want to go out with friends. Well, now because you're paying your kids, and they actually do got to be working in your business, obviously. And there's so many things they could do. Like even a couple of my clients, their kids pretty much is like a model in their business because a lot of their shoots that they do and things like that. Good evening. A lot of the shoots that they do, they're using their kids to help promote their business. So their kid is part of their marketing. Okay, 6 year old, part of marketing, 5 year old, part of marketing. Okay, pay your kids, and no, they don't have to file tax returns. Okay, they do not have to file tax returns. So if you have kids, and think about that, if you got a couple of kids, okay, and they have things they could do, um, you should be, we're going to give them money anyway for allowance and all the things. Let me tell you, when my kids were younger, my kids my two daughters, they're on their own at this point. But what I'm saying is that when they were younger, they definitely used to help me. We would do things like when clients would come here to get their taxes done, I'd have my children like serving them some bottles of water, some snacks, and doing different things. Or maybe sometimes people were just coming to pick up their taxes. So I would have one of my daughters meet them and, give them their envelope and just different kinds of things. They would do organization for me, managing files. When they started getting good with other things on the computer, I'd have them help me with different little tasks. So hire your kids. Don't sleep on the things that they could do. Okay. Another thing that you want to do before the end of the year is you want to check your withholding. Okay. You want to check your withholding, which you can do if you still work, if you have a traditional job. Check your withholding, look on your last payout, and you want to see, how much has come out so far. And you can kind of compare it to what you paid last year if you're kind of in the same income bracket or whatever. And yeah, if you're in the same income, you kind of want to get an idea of how much was already paid out. Make sure you're on point with that. All right. And you also want to pay attention to, has anything changed? Okay. You want to start doing some assessing. I call it like assess your life events from 2023 when you compare it to 2022. Okay. You want to check on things like, am I still going to be claiming the same dependents? Because um, a lot of people, they don't even realize, for example, that their child is about to be in a situation where they're no longer going to be able to claim them. That recently happened to a client of mine last year. They didn't realize that they were no longer going to be able to claim the child, so they had claimed head of household on their payroll all year, and they were no longer head of household. Okay, they were no longer going to be head of household. So it changed everything. It changed everything. These are things you have to be pre-thinking, and had the client have known that, ahead of time, communicated that to me or whatever, there could have been something they could have done to update their W-4 and fix that before it was too late. Okay, so you always want to be assessing, is your filing status changing? Even when it comes to like married versus maybe you got divorced, maybe you left your payroll saying that you're married, okay, but you need to change it to single. So all of this stuff makes a difference. And you also want to learn more about your tax bracket. Where do you fit in? Learn how to calculate it. One of my videos on my YouTube channel, I teach you about how to figure out your tax bracket. Okay, so you definitely want to check out that video. Okay. Now, business owners, you want to clean up your bookkeeping. Okay, clean up your bookkeeping. Make sure that you have, I don't even care if you're just using an Excel spreadsheet, like whatever you're doing, Google Sheets, whatever you're doing. Clean up your bookkeeping because this is how you minimize overlooking tax deductions. Okay, when you don't have things in order, all right, when you don't have things in order, you're going to miss a lot of deductions down to all sorts of expenses that you didn't even remember. Okay. You also are going to be reporting numbers incorrectly because your bookkeeping isn't cleaned up. Categories are going to be all over the place. You have things miscategorized, and you don't want to have things miscategorized. You would much rather have them categorized properly because you might over report things in one category and underreport things in another category. And things like that is, listen, there's really no particular thing about red flags, but this can surely be one of them when your numbers like are all over the place. Okay, so you definitely want to clean up your bookkeeping. All right. Now, another strategy that you can use if you don't already have a business or something you do on the side, maybe you need to think about starting one. It's not too late. I've been spending so much time in November, October, November, and even now in December, opening up so many LLCs for people. It's not even funny. Okay. Um, a lot of people are doing something on the side. They have a hobby or whatever. Maybe it's time you think about converting this hobby to an actual business. Okay, so that you can reap the benefits of these tax. You're spending money to do your hobby anyway. Might as well maybe make it an actual business. All right, and your business definitely has to be in business to pursue a profit. Okay, but when you first start your business, you are entitled to startup costs up to like $5,000. You're also entitled to write off organizational costs up to $5,000. Okay, and you can potentially write off many more other things. But one key thing you do want to make sure you do is at least make some kind of sale. All right, at least make some kind of sale because this is going to prove that you are actually in business. So you are entitled to the deductions, to the write offs. Okay. So, yes, maybe it's time you think about starting a business. And it doesn't have to be so complicated. There are so many things to do out here. It's amazing that you can do part time. And not only is it an extra stream of income, but the main thing is that it's giving you the opportunity to write off things that you don't normally get to write off. Okay. Now, if you already have a business, all right, maybe it's time to reassess your current structure. Okay, the way your entity is set up. Maybe it's time to convert like your sole proprietorship to an LLC to kind of show you're taking your business more seriously. Get yourself an EIN number, make sure you get a business bank account. You want to do all the things. It may be time to like restructure your current entity. Okay, that's one of the things I do when business owners come to me. I do like entity assessments and optimizations to make sure that they are operating at the best business entity type that works for them. Maybe it's time to convert your LLC to an S corporation. Okay, maybe it's time to do that. Also, believe it or not, having your LLC taxed as a C corp is not always too popular. But sometimes there may be circumstances where maybe you need to be taxed as a C corp for whatever the reason is. That's why I'm always telling people there's no one size fits all to any of this. And you need to be working with a tax professional. Okay, because we can honestly save you the most money and we're tax deductible. Okay. So, yes, you want to also restructure your uh, entity. Okay. So now also I do want to mention that you are welcome to, I don't really have that many slides left, but you are welcome to book me for a year-end strategy call. Okay. Maybe you don't really have someone that you can consult with and you want to get some one-on-one questions answered, have me look into a few things for you. You're more than welcome to book me for a strategy call. Okay. Now I'm going to go over a few frequently asked questions, and I kind of handpicked a couple of questions that I've gotten between this year, last year. Just a lot of these are recurring questions, okay? And you're also welcome to post some questions, and hopefully I will, get to answer it and on this live. But I'm going to go over some of the frequently asked questions that I often get and that I also see a lot of times all over social media and everywhere. One of the first frequently asked questions: can I claim my pets as a tax deduction? Okay. Can I claim my pets as a tax deduction? Okay. Y'all wave to me or hit something and let me know if you got pets. Okay. So here's the thing. No, the answer is no. You cannot claim your pet as a tax deduction, as expensive as they are. But guess what? If you're a business owner and you can find a way to have, your pet is aligned with you running your business, maybe it's serving as a guard dog, like, whatever. The bottom line is if you can find a way to that it's, can legitimately qualify as being affiliated with your business, then some of your pet expenses can be deductible. Okay, can be tax deductible for your business. So there's, a little loophole there for pet owners who are business owners. All right. Another frequently asked question: are home improvements tax deductible? No, they're not. Okay, you don't know how many people come to me all the time, but I did this to the house, I did that to the house. It doesn't matter. No, they're not deductible. Okay, now again, if you're a business owner, notice that there's so many things, like I'm always telling everybody, these taxes were created for business owners, not the traditional employee. Okay, so, but if you have a business that you're doing from home and there's certain things that you did to improve that part that has to do with your home business or whatever, your home office, then a portion of that, yeah, you can write off some of those home improvements. Okay. So it really, again, it just depends. Okay, it depends. And speaking of, these home expenses, another frequently asked question I get: can I write off home expenses if I work from home? Not if you're an employee. No, you cannot. Okay. But if you have a business from home, yes, you can. And there's also another loophole here as far as home expenses, because when I was speaking earlier about how you're structured, there's a loophole there that if your business is structured in a certain way and you pay yourself in a certain way, your business can reimburse you for your home expenses. Okay. So if you work from home for the business that you own. Okay. So again, these are all reasons why you should be working with a tax professional. You don't got to work with me. You know what I mean? But you would definitely want to pick someone who understands your business and knows what they're doing. Okay. And they're savvy when it comes to taxes and business. All right. Here's another frequently asked question: are there penalties on filing late if I'm due a refund? So the answer is no. Okay, no. Penalties are imposed on people who owe. Okay, when they owe you, you do not get a penalty for filing late. Okay, I'm not advising you to file late. I'm just saying that if you're due a refund, but a lot of times we don't always know whether we are due a refund or not. So if you're not sure, yeah, you just want to make sure you file. But if you're due a refund, no, you don't get hit with a penalty if you file late. Another question: how far back, and I'm going to kind of go through these kind of quick because I don't like to, keep you guys too long. But how far back can IRS audit? Okay. Now that's a tricky question. It's a gray area because usually on average, I want to say it's kind of like maybe 3 years. All right. But if there's like substantial errors on your returns, they can go longer than that. All right. They can go longer than 3 years. And if there's fraudulent stuff on your return, it's actually indefinitely as far as how far back can they audit. Fraudulent stuff, it's indefinitely. All right. So that's to tell you about that. Now, what happens if I can't pay my tax bill? Well, there's options. Okay. There's options to get on payment plans. Okay. Sometimes there's options to make an offer and compromise to kind of offer to pay less depending on what your situation is. All right. And so you have some different options out there that they can work with you to. And again, I wouldn't advise doing it alone, because there's like a financial form when you try to work out a way to pay them. There's a financial form that you have to fill out that can be very complicated, and if you don't know what you're doing and you're filling it out incorrectly, you can wind up getting on an unaffordable payment plan just because you didn't fill it out properly. Okay. So yeah, that's why you're going to be working with a tax professional. Now this isn't necessarily a question, but sometimes I hear this statement a lot. I'm scared to file because I know I owe, right? I'm scared to file because I know I owe. Don't do that. Don't do that. The worst thing to do is to not file, even if you owe, because as I just mentioned, there's certain things you can do to take care of what you owe one way or another. All right. And believe it or not, sometimes you can be placed in currently non-collectible status. It just depends if you qualify for that. But yeah, I'm scared to file because I know I will owe. The worst thing to do is to not file because they can turn around and file what's called a substitute tax return on your behalf. And that's the worst thing because when they file a substitute tax return, they know nothing. They don't know your filing status. They don't know what deductions, what credits you're entitled to. All they know is that they received the financial statements that were sent to you at the beginning of the year, and that's what they use to go off of to prepare that substitute tax return. But if that does ever happen to you, you do still have the option to file your actual return, which will override the substitute return that they prepared. Okay, so you see how that works? Okay. Now, the next question. Should I itemize or take the standard deduction? Remember, I kind of was talking about that earlier when I was like itemizing or standard. So here's the thing. First of all, you have to qualify to itemize. You don't just really get to choose which one. And obviously, you want to choose the one, excuse me, that's going to give you the greatest benefit. And because they keep raising the standard deduction, most of us don't really qualify to itemize, but some still do. Believe it or not, some still do. And so, should you itemize or take the standard? That depends on which one is going to give you the greatest benefit, obviously. Because if you are able to itemize and it exceeds the standard, okay, then you would obviously want to itemize. Okay. Now, should I file jointly or separate? Another question, another frequently asked question I get. If I'm married, should I file jointly or separate? Again, it depends. A lot of these, sometimes these answers are it depends because there is no one size fits all. Sometimes maybe your spouse has a lot going on and you don't want to file with your spouse to have your finances tied up in that. And that might be more beneficial to you. But then at the same time, sometimes filing separate, okay, takes away a lot of opportunities, okay, that you would normally get if you file jointly, but because you file separate, it takes that opportunity away. So it really, really depends. And again, that's why you should work with a tax professional. You really shouldn't be trying to figure out. Notice a lot of things I'm naming are complex situations, and you shouldn't be trying to figure that out all on your own. You could do all the research and Google research all you want. Okay, but you should not be trying to figure that out on your own. What's the difference between a tax credit and a tax deduction? Because we hear both of those terms a lot, right? We hear both of those terms. So what's the difference? Okay. Here's the summary. All right. Deductions reduce your taxable income, right? Because remember, we have taxable income. How much of our income is being taxed? Well, deductions help reduce that. Credits help reduce the amount of taxes you owe. So you see the difference? One is helping to reduce the taxable income, one is helping to reduce the amount of taxes you owe, which is the credit. Okay. Usually most people like credits better than deductions because the credits reduces that amount you owe dollar for dollar. Okay. So that's definitely something to keep that in mind. Okay, and I think that's all my frequently asked questions that I have. Okay, that's definitely all the frequently asked questions that I have. So if any of you have any questions, you can put it in the chat and I will answer them. If not, I'm going to be soon closing up for tonight. And I thank you all so much for joining me on this live. Do make sure you go visit mytaxpartner2024.com. Also, if you're just someone who wants to just get my best tips, then you should sign up at Rebrandly. Okay, Rebrandly slash get my best tips. Okay. And I believe Rebrandly is like a bit.ly. The ly comes, it's like rebrand.ly/slash get my best tips. Okay. So you want to go there. And as far as all of these links are on my link tree as well. So you can find everything you need, honestly, is to go to my link tree and you'll find everything you need. Also my calendar, which is on my calendly/kharge. All right. But every link that you need to, contact me is in my link tree. All right. So I thank you all for joining. I don't see any questions. So I hope you all are good. I hope you left better than you came, more informative. It is my goal to always help you be an informed and empowered taxpayer. All right. So I thank you all for joining. And I'm going to be ending my live. All right. Take care, guys. Good night.